The truth is that most of you want to trade gold, but most of you keep on losing the more you trade gold. It's not because the trading strategy you have been using on other instruments are wrong, but it's just that gold is a little bit different from the other instrument. And it is true also that based on statistic, gold has been one of the instruments that has been helping traders to build up their capital very fast, especially if you're a trader that has been trading with little capital. But now the problem now is that how can you be among those ones that have been making massive incomes when it comes to trading gold? Now let me show you this. I've discovered that there is four guidelines or four tips that you have to follow as long as you're a gold trader, especially using technical analysis. Now if you have, as you are seeing on this particular trade now, if you see that, you will see that discover that we have been working on gold massively, and from this particular swing, since when gold was on this zone, we have been catching gold. Now we're expecting gold to reach this particular zone in a long move. Now how do we do this? We to do this, taking these four tips or four guidelines. I'm going to be showing you recently how to trade gold massively. If you want to trade gold as a profitable gold trader, I'll be showing you these four guidelines or four tips. Don't forget to stay with us. Now just yes, check here also. Now this is the short trade that we have been working with gold on. This particular guy here, this particular trade now here, this is where we took our entry. This is the trade has been going. Now we have been observing the trade. We are taking our trade out from this particular guy here. This to almost 1:3, 1:3. This is 1:3, and we are also, now we have designed another plan again. This is our third plan that we have designed, waiting for gold to reach, that will still press on gold buy now. So how do we take this now? We have taken all this trade, taking using these four guidelines or four tips. So now let me be showing this. Let's go to the main point of this video. Let me be showing you these four guidelines or four tips that we use to trade gold massively. And that's it for that. So let's go to the main point of this video, and this is the trade that we have been working on recently. This is a swing trade that we have been working on from this guy here. This way we are anticipating as our target, but this is the short move that we are expecting, that we are working on. This is the guy that this zone is what we are expecting as our this is our target over here. But meanwhile, let me walk you on how we get to do this using the four tips or four guidelines I have told you earlier. These are the guidelines that we have used to take all this trade. So let me get rid of this. Let me start fresh analysis. Let me get rid of this. So when it comes to gold trading, the first thing that I need to understand is what I call the market structure. I know that this is a language that you guys are familiar with, even though most of sometimes you see that this is a concept that most traders are familiar with, but the way they approach the concept is the basic problem. So let me show you what I mean by this. So the first thing that I do when it comes to analyzing gold is that I get my market structure. And how do I do this? I get my market structure when it comes higher time frame. So when we mean market structure is that we know normal we said that there are three kind of market structure. It's either there's a bullish trend or bullish trend or bullish structure. When I mean bullish structure, is this is what I mean by a bullish structure. When you see a higher high, a higher low, a higher high, a higher low, and a higher high. This is the character of a bullish trend, this guy here. And we have the bearish trend. Now simply when we say bullish trend, meaning that the market has possibility of going up, and there's what we call a bearish trend, when you have lower low, lower high, lower low, lower high, and lower low, lower high, and lower low. I will say there is the range in O consolidation. That is when market is on a particular point. That's when market is at a spot. When market is just at a spot, it has maintained a particular peak. It has maintained a particular peak. So now when it comes to trading, especially when it comes to trading gold, the way we approach this tree trend or market structure is very important. It's very important. So the way we approach this guy here is different from the way we approach this bullish structure is different from the way we approach this. So let me get rid of this. So now what we mean that taking the first structure, now we see that the first thing that we need to see is that we need to go to our daily time frame, because there is always what is called the triad trend. The triad trend means there's three time frame that we need to work on. Is either you work with the daily time frame, the daily, the 4 hours time frame, and the 1 hour time frame. These are our triad, and when it comes to trading gold, it's very important that you take note of this. Even though you can work with 4 hours, 1 hour, 15 minutes, but for me I mostly use daily 4 hours and 1 hour. The reason is that I use the concept that is called the top down analysis, which is very important when it comes to trading gold. So I prefer seeing my setting my target from the bigger point of view, seeing my trend from the bigger time point of view before taking it to the smaller time frame. So this is what I mostly use: daily, 4 hours and 1 hour. So I use my 15 minutes for my entry, then I use 5 minutes as my confirmation time frame. So now the first thing I need to do is that I get my market structure within the daily time frame. The first thing that I do is the daily time frame. I set my market structure. This is the first tip that I need to know. You have to know, okay, from the bigger picture, what is the market structure? What is the market structure? So now how do we get this from our market structure? So now once we look at this, we know that this is a bullish structure. So how do we do this? How do you know this? Is basically there you can do this using indicators, or you can use this manual using trading tools. So let's just do this using trading tools. You can take your trend line. This is my trend line. Set my trend line. Just get my first touch, second touch, and my third touch. I just need 3 touches. You see, this is the first touch here. This already have a touch here. I have a touch here. There's another one here. There's another here. So at least I have 4 touches confirming that the market is still going bullish, even though subsequently video will coming on how to understand market structure properly, and how to basic things that I mostly use to know when there is a break or a shift of market structure. So but for now, you can use your trend line to understand, okay, this is where your market structure is going. So once you are done with this, from our daily time frame, still the next thing that you are going to do on your daily time frame after you are done with the first tips is you have to know your market structure. Now the second thing is that you have to know what are your zones. You have to know the zones that gold is respecting, from your higher time frame to the lower time frame. So you have to know which zone is, or which zones are gold respecting. So how do you do this? The first zone I mostly like taking is, you have to know where is price coming from. Then you have to know that, okay, where is price going to? That's from your higher time frame. So now basically we have seen that one of the places that price is coming from, this is our trend line. This trend line here is serving as support for price, and the second zone that we saw price respecting is this guy here. this breaker block, this breaker block, this guy here. What do I mean by our breaker block? When I say breaker block or mitigation block, mostly when you see price is going like this, is going bullish, you should, so the last bearish candle here, the last bearish candle at this zone is called your breaker block, or it can be your mitigation block. So we are expecting price to, mostly when price is here, we are expecting price to come and swap this, to take this out before going up. You see it here, this is what we mean by breaker block. So price came and broke through this guy here, it broke, it came back and retested the place. So the last bearish candle, I mean to say here, the last bearish candle, this is where our breaker block here. So there was the same thing that came up here. You see it here, price went up, came down, broke through here, went up, it came and retested the zone. So now the last bearish candle, so we can take our breaker block from this particular zone here, this particular zone here. This is where price came and tested. So now this is where price is coming from. So I can still make it a little bit smaller since it's already clear, so that my chart will not look roughy and messy. And let me get rid of this. So now okay, so this is where price is coming from, this guy here. So now the next thing I said is, where is price going to? We saw that based on the concept of support and resistance, or our zones, we saw that the next place that price is, we are expecting price to reach, is this guy here, this particular zone here. From our daily time frame, price is coming from this guy, this trend line, and this particular zone here, this breaker block, and price now is heading to this particular guy here, this support zone. So in the concept of this resistance zone, I mean to say, in the concept of support and resistance, once you see price at a particular point at least twice, is called a support or a resistance zone. So now we saw that price was here already, because this is the week, this is where the candle close. Price was here once, let me use this, price was here once, now this is the second time. So it means that once you see price at a particular point twice, it means that you have to respect that place as a support or a resistance zone. That's the concept of the principle of a support and resistance zone. So now this is, we saw that price is at this particular zone over here. So now this is serving as our target for price. So now what do we do? Since we have already known where we say the first tips or the first guideline is that you have to know your market structure. We know that we are already on your bullish trend. It means that everything we are doing is, we'll be looking for buying opportunity. Once we are in bullish trend, we are looking for buying opportunity, and once we are on a bearish trend, we are looking for selling opportunity. So now, since we are on the first thing is that we know our market structure, the second thing we know our zone, then the third thing what we need to do now is that we need to go to our 4 hours time frame. So now we are done with daily time frame. On our 4 hours time frame, we still need to check and see, okay, what is price doing? Since now we know this is our target, this is price target, this guy here, this is our target, this is our target for price, this is our target. Now we know this is our target where we are expecting price to reach. So now what is the next thing that we need to do? So now we are still need to check and see what is the market structure within our 4 hours time frame. Our market structure, so we saw price came to this target once, came back, this when price came and respected this, price was working on this trend line, we saw it, and this trend line was violated, and next we saw that price broke and retested the trend line, and price was heading towards this guy here. Now this was the trend line that price was working with. we saw it now. We saw that price was going on this trend line, so it means from our 4 hours time frame also that our market structure is still bullish. Price is still heading bullish, so we need to set our lower zones. We still need to set our lower zones. So this is a zone here. We saw a zone at this point. There is a zone. I told you the basic concept of support and resistance. When we have more than one touches, price is respecting a particular point more than once. And now we saw one here. Remember, we saw one here, we saw two here, we saw three here. Price respected this guy, red price came and respected this guy, and price is still there now. So we saw different, we saw more touches. Yeah, we saw, this is what I'm saying. So we saw almost 5, 1, 2, 3, 4, 5. So it means this is a very good zone for price, for it to hold price, and this is what has been holding price. So let me get rid of this also. Let me get rid of this. I'm giving you a basic simple guide that you can use to trade gold, a very simple tools that you can use. 4 guidelines to trade gold. I tell you, the first thing is you need to know your structure. The second thing is that you need to know the zones that price is respecting. These are the zones that price is respecting, so that they will serve as turning points or checkpoint. Just take the zones as checkpoint. Now we saw this, and we saw this is where price was, and we saw another zone here. This zone also is a very good price. We saw price as this one here, 2 here, 3 here, 4 here, and 5 here. So this is a very good zone also for price. So we saw one, and this is why even price, this is what push price. This particular guy here was what push price. So this is another zone that we are expecting to, whenever price is at, price need to react. We are expecting reaction here, we are expecting reaction here, and this is our next reaction. So now we said that if we are in bullish trend, we are looking for what? Buying opportunity. So now what do we do here? It is very simple what we are going to do here now. Since we are already on a zone excuse, this where we are already on zones. Which zone? We are on 2 zones. The first zone is this trend line that is serving as support, because it's still telling us that market is going up. And now we are on a zone, this resistance zone, that is serving as a checkpoint for price. So we are expecting price have to react on this particular zone. Meanwhile, we even saw a chart pattern about to be formed. So now we have to be very careful with this particular zone. Now I'm doing live analysis showing you these 4 tips or 4 guidelines to trade gold. So once we are done with it, this third thing that I'm going to show you on that is very important is that you have to know your point of entry. So you need to know your entries. I told you the first one is you need to know your, let me write it here, your market structure. Your market structure. You need to know your market structure. Then number 2, you need to know your zones. You need to know your zones. Then number 3, you need to know your entry zone. You need to know your entries. You need to know your entries. This is number 3. So you see, number 1 we say market structure, number 2 your zones, and number 3 your entries. So this is it. And we say your market structure, zones, entries, number 3. So once we get, you know your market structure from a daily time frame, you go to your zones, where price is coming from and where price is going to. Then we check also on 4 hours, okay, the zones, the minor zones that price is respecting. The next thing that we need to do is we need to go to our 4 hours time frame. So I mean to our 1 hour time frame, to know, okay, this is now where we are at. This is where we are at our entries. Now we are looking for entries. Since we know that we are looking for buying opportunity, how do we take this? So we are going to use this particular swing point as our entries, from this guy here to this guy here. So this is now what we are expecting. Now the first thing that we need to know is that we are expecting this zone here to serve, we are taking this as a resistance zone. So now any decision that we make have to be on what this zone has to do based on price. So now, but for that we can still take this is what I did here as an entry. I take this counter trend line. I was expecting to see, okay, once price broke this through this trend line, I'm going on buy. That was what we did here. And also we saw also this particular zone that served as support for price, and we saw that you see price came and broke through this guy, because there was first touch here, second touch, third touch, price broke through and came and touched this. So we are expecting that if price should, this guy should serve as support for price, especially seeing this trend line that wasn't broken. So we are entering, so that was why we entered at this. We use this guy here, this trend, this place here, as our entry. This was why we use this as our entry to target this particular point. It was a very nice entry for us. All we were just waiting for was to see what price will do at this particular zone. So that was why we use this particular zone as our entry. So this is what you do. So you still need a zone as from your 1 hour time frame as an entry. Once you have gotten your the zone that price is respecting in daily time frame and in 4 hours time frame, you also need a zone for entry from the 1 hour time frame or 15 minutes time frame. So meanwhile we got this guy here, this zone from 1 hour time frame. We saw this trend line that price has been respecting also in the lower time frame. So we took advantage of this. This is it for that. And also for you can still use the 15 the Fibonacci zone also as zone for entries. This how you just take this swing here and this swing here. Just take this particular swing from here to here. Get that is using your Fibonacci to add to more confidence. We saw that this zone was on 0.5 golden zone here, so you can still enter using this zone, just putting your SL below the 0.61. Move make your entry here. So it's still a very good so you see we have three zones. One, we saw this support zone. Two, there is trend line that price is resting on. Number three, there is our Fibonacci. There's the Fibonacci 0.5 level, our trend line, and our support zone. And we also saw this rejection candle over here that is showing us, okay, that price is about to go up. So now these are the three zones that we use as our entry. You can use your stop loss below the 0.61 level or below this trend line and support zone. That's a very good entry for you to you can utilize, using just utilizing this swing, from this swing to this particular swing, from this zone to this zone, you taking advantage of this particular swing. So once you have gotten the zone for your entry, I told you the first thing you need is your market structure. Second thing you need to know is your zones that price is respecting, that you need as zone that is the price is coming from and where price is coming from. We know that our major target will be this particular guy here. This is where we are expecting on a long move. So the third thing, once you have gotten the zone that price is respecting, that you are using as your entry, you don't just enter. Mostly this is where especially beginners traders on gold are found guilty, because when they see the zone they will just enter, except if you are very good in sniper entry. The fourth tip, or the fourth thing that you need to take note of when it comes to trading gold, is what is called confirmation. Is very important. Confirmation confirmation. You need confirmations. You need things that you can use as confirmation. So we use our 15 minutes or our 5 minute mostly as confirmation when it comes to day trading. So what do we use as confirmation here is very simple. You can use number one, counter trend line. You see, that's why I said this particular one is sound counter trend line. So you can use uh, this guy over here as your zone for counter trend line. You can use take it this way, your counter trend line. I mostly like to confirm if price really is respecting it. So you can set a counter trend saying that okay, once price break this counter trend, this bearish trend line, so you are going in. Or you can check for any break and retest. Maybe you can use this break and retest. You see it broke through here and retested this. Or you can check break of and shift of market structure. See here, we have been going bearish on a short move. Now from this guy here, we saw that price broke through here, it came back, now it broke through here again properly. You see it. So this guy can decide to make your entry if you are not trading using sniper entry, but we can just decide to say that okay, as confirmation, once there's a shift, this shift that occur at this particular point here, we saw there's a little shift in the structure, break of structure also here, because we are expecting a lower low, lower high. We're expecting a lower low, then we now saw a lower high, so it means that price is about to change direction also. So you can still make your entry at this guy here. This is what I mean to say. Let me show you what I mean here. Okay, so once there's a shift here, you can make your entry around this zone. You can make your entry around this zone, targeting this point, your stop loss at this particular zone here. So this is another confirmation. Or I mostly like using this indicator also, the RSI divergence indicator. This indicator I mostly using this indicator as confirmation. So since this is the zone that I'm anticipating price, I'm expecting price to enter from this here. So what I'm expecting is just to see a divergence around this zone. I'm expecting to see a divergence, especially within the 15 minutes time frame. So now this is once I say that, it means if price is going here, I'm expecting, once price is going down here, I'm expecting price to be going up here. See, as this price was going up at this particular zone, I'm entering. Once I see price going up here and here price is going down, I'm entering. So I can still use this as confirmation, or I can use the MACD also. I sometimes use MACD as confirmation also. You can use MACD as as divergence indicator also, or I can use it to see, once I see my volume, once I see this blue line here up, and I see massive volume here going up, so I'm going up also, it means that I'm seeing buying pressure also. So I can use this with my RSI as confirmation. So remember, we said the 4 tips are very simple, or 4 guidelines are very simple. The first thing is that you need to know your market structure. You need to know your market structure. Number 2 is that you need to know your zones. You need to know your zones. Where is price coming from and where is price going to, and you need to check what are some of the zones still within your daily and 4 hours time frame that price has been respecting. Number 3, you need to come to your 1 hour time frame or your 15 minutes time frame to get the zones that you are going to use as entry point towards where price is going to. Number 4, you need to get confirmation to confirm, okay, based on the entries that you have gotten, is price respecting the zones, is price going according to where you are going to. These are the 4 guidelines that if you really want to trade gold, You need to stick to this. They are very important. That will help you to speed up your trading skills, especially when it comes to gold or any currency pair or any instrument that you are trading in the financial market. Don't forget, if you are new on this channel, don't forget to smash on the alarm button and subscribe button. Also, if maybe there's anything that you have tried on gold, especially on gold, that you find out that is very important, don't forget to drop it here, to drop it. Or if you have any question or any comment, anything that you want to say, don't forget to drop it at the comment section. Drop it.